when the price sharply breaks through a significant point and then suddenly reverses. Many traders wonder whether it was a liquidity withdrawal or a trend break. To figure this out, you need to understand how the smart money actually works and how the big players move the market. If you haven't seen our previous video about smart money, I recommend you to watch it because there we analyzed who stands behind the smart money and how they control the market movement, leaving traces on the chart that you can learn to read. That's important information to help you better understand today's topic. Today, however, we will focus on how to identify the difference between liquidity withdrawal and trend break and how not to fall into the traps set by the big players. But before we get started, don't forget to put a like and subscribe to the channel. It will help you not to miss new useful videos, and it will help me to share even more valuable information with you. Let's start with the basics. What is liquidity withdrawal and what is trend break? Liquidity withdrawal is a situation where large players purposely create price movement to collect liquidity that is in the form of retail traders' stop orders. These actions help the large market participants to get liquidity for a further price movement in the direction they want. This usually occurs near key liquidity zones, such as equal highs or lows. In order to make the concept of liquidity withdrawal more understandable, imagine the following situation. When the price approaches a significant zone, such as equal highs or lows, a lot of stop-loss orders of retail traders are accumulated in this zone. This is a kind of piggy bank, where the money of small market participants is located. The big players see this piggy bank and realize that they can use it to build up their position. When the price approaches this zone and a breakout begins, the stop orders of the traders who were holding buy positions are activated. These stop orders represent market sell orders. Thus, the moment the price breaks through the liquidity zone, the big players start to buy back these sales, using a large volume of orders to build up their positions. Basically, liquidity withdrawal is the use of the volume of money of small market players to build up positions by the big players. Retail traders may mistakenly think that it's the broker has purposely created such a sharp candle to knock out their stops, but in reality, it's the smart money using the accumulated volume to enter the market on more favorable terms. Trend break is a moment that indicates a change in the current market trend. It could be the start of a new trend that is moving in the opposite direction. Signs of a trend break include the updating of significant lows and highs and the emergence of a BOS or CHO-CH. BOS is a break of structure, an update of structural lows and highs in continuation of the current trend. In an upward trend, there is an update of highs, and in a downward trend, there is an update of lows. CHO-CH means a change of trend direction. It occurs when the last minimum in the structure is updated on an upward trend and when the last maximum in the structure is updated on a downward trend. This ability to distinguish between these two phenomena allows a trader not to fall into traps and confidently follow the market movement. Did you know that the concept of liquidity withdrawal has been around for decades, but has started to be widely used only in recent years due to the opening of access to more market data? In the past, big players manipulated price with minimal transparency. But now, thanks to the internet and the analysis of market data, we can see traces of these actions and use them to our advantage. An interesting fact is that back in the 1980s and 1990s, the concept of liquidity withdrawal was actively used among professional traders, but it was barely mentioned to retail market participants. Back then, large funds could literally shake out small participants in order to use their liquidity for their own purposes. Today, understanding of these mechanisms is available to anyone who wants to study the market more deeply. Why do many traders confuse the concepts of liquidity withdrawal and trend break? The answer lies in how similar these processes look on the chart. Both phenomena are often accompanied by a sharp price movement that breaks significant extremes. However, when there is liquidity withdrawal, the price usually moves back into the range, while when there is a trend break, the price continues to move in a new direction. It is extremely important to understand this subtle but important difference in order to avoid opening trades in the wrong direction and losing your capital. Example of liquidity withdrawal in real market conditions. Imagine that the price is moving up and approaching a significant zone. Many traders think that the price will overcome this zone and move on. They start buying while others place their stop orders near that zone. What do the big players do? They move the price higher to activate those stops and collect all the liquidity accumulated in that zone. Thus, when the price reaches a level where many stop losses have accumulated, a massive closing of positions begins. Then large players may start selling aggressively, which leads to a sharp reversal of the price. This is the classic liquidity withdrawal. Once all the stop orders are activated, the big players are in an ideal position to start selling aggressively. As a result, they start to close their long positions and also start gaining short positions in preparation for a price reversal. At this point, the market experiences a sharp move in the opposite direction as the smart money moves in with the liquidity they have gained to push the price in a direction favorable to them. This often marks the beginning of a new move or trend, and retail traders, unfortunately, find themselves shaken out of the market. The key point is that if you see a sharp move followed by a pullback and aggressive reversal in the opposite direction, it's likely a liquidity withdrawal. Now let's talk about trend breaks. How do you know that it was not a liquidity withdrawal that occurred, but a change in trend direction? One of the main signs of a trend break is a change in the market structure. An upward trend changes to a downward trend and vice versa. This usually happens through a BOS, when the price breaks a significant low in an upward trend or a high in a downward trend. It is also important to consider the direction of movement on the higher time frame. If the price is in a zone of interest, for example, in the area of an order block or imbalance area on the higher time frame, and we see that there is a change of structure, this is a signal of a possible trend break. Practical application. How to identify a liquidity withdrawal or a trend break. In order to use this knowledge in your trading, you need to follow a step-by-step analysis algorithm. 1. Determine trend direction on the higher time frame. Always start with the higher time frames to understand the global direction. This will give you a better understanding of the current context. For those who find it difficult to identify the trend on their own, you can use the Trend Monitor VZ indicator. This indicator displays the wave structure of the market and shows the current direction of the main trend on the selected time frame. For your convenience, Trend Monitor VZ also shows the trend direction on all time frames and for the entire list of currency pairs you trade, which makes analysis much easier. Trend Monitor VZ is compatible with MT4 and MT5 platforms and can be purchased on the MQL5 website. The link will be in the description below this video. This is a great tool for those who want to get an extra advantage in identifying market trends. 2. Find key liquidity zones. These can be equal highs or lows, order block areas, or imbalance zones. These areas attract the attention of big players and are often used for manipulation. 3. Wait for a breakout and analyze price action. If the price breaks through a significant zone, pay attention to what happens next. If the price comes back and starts moving in the opposite direction, it is probably a liquidity withdrawal. If the price continues in a new direction, it is likely a trend break. 4. Look for confirmation on the lower time frames. If you want to trade on the lower time frames, wait for confirmation such as a break of structure at a lower level to enter a trade with a higher probability of success. The most important thing you need to understand is that the market never gives a 100% guarantee. All we can do is trade according to the scenarios with the highest probability of success. So don't try to guess the market, don't rush to enter trades at the first price movement. Wait for confirmation and analyze higher time frames to be confident in your actions. Today we have looked in detail at how to distinguish the difference between a liquidity withdrawal and a trend break, and what makes each of these phenomena unique. We have also discussed how the big players use liquidity, and what to do to avoid falling into their traps. Now it's your time to take action. Understanding these elements is not just theory, it's your key to successful trading. Every day, thousands of traders make mistakes, losing money because they don't understand what's really going on in the chart. But you now know better. You have everything you need to stop being a victim of manipulation and start using this knowledge to your advantage. And here's your assignment. Open the chart and find 10 examples of liquidity withdrawal and 10 examples of trend breaks. Take some time to analyze the market carefully. Write down these examples. Study in which situations liquidity withdrawals occurred and when price change direction and trend break became obvious. These actions will help you consolidate your knowledge and turn theory into practice. Understanding market structure and liquidity withdrawal will not come overnight, but with each day of your analysis, you will become better and better. In trading, success belongs to those who work hard and methodically on their skills. And today you can take another important step forward.